What if one small decision, just $100 placed at the right time, quietly changed your entire financial future? Not a lottery ticket, not luck, not insider information, just a simple investment in Apple before most people believed in it. Back then, it didn't look revolutionary. It looked ordinary, almost boring, just another tech company trying to survive. And you had a choice: spend the money now on something temporary, or plant it somewhere that might grow slowly. It's 2003, nobody is calling it a trillion-dollar company, nobody sees the future clearly. The iPod exists, yes, but it doesn't feel like a financial revolution yet. Most people shrug. They say it's just computers, just gadgets, nothing life-changing. The stock chart barely moves. Small lines, small numbers, nothing exciting. It looks boring, painfully boring, and boring rarely feels profitable. People laugh at early believers because exponential growth never looks exponential at the beginning. But you press buy anyway, not because you're certain, but because you're willing to wait. That one click doesn't feel dramatic, it feels almost insignificant. A year passes, nothing explosive happens, no fireworks, no headlines. The stock moves slightly upward, but not enough to impress anyone. Doubt creeps in quietly. Maybe this was unnecessary. Maybe the money could have been used elsewhere. You read small headlines about digital music growing, but it still feels early. Waiting becomes uncomfortable because growth takes time and time tests patience. Another year passes, still no dramatic transformation. The numbers increase a little more, steady but unimpressive. You cross your arms and wonder if this will ever become something meaningful. The investment still looks small, almost invisible, like a fragile sapling in a world obsessed with fast results. New products begin to appear quietly, not revolutionary yet, but clearly moving in the right direction. It's 2006 now, and most people still don't see what's forming beneath the surface. The stock line curves gently upward, not dramatic, not viral, just steady progress. You think about selling, you really do, because nothing explosive has happened. But patience is a decision, and you decide again to do nothing. There's a sense that something bigger is building, even if the numbers don't scream it yet. Then comes a moment that feels different, a product that changes the tone of the room. It doesn't look like a stock chart shift yet, but innovation has entered the story. And suddenly, your small investment is connected to something transformative. It's 2007, and the first iPhone arrives, redefining what a phone can be. You don't see billions yet, you just see potential expanding. The stock begins to move with more confidence, the curve slightly steeper now. People who laughed before start paying attention. Growth accelerates, not wildly, but enough to feel real. Your original $100 begins multiplying quietly in the background. You still feel doubt sometimes because volatility never disappears completely. Time keeps passing, and each year adds another layer of strength. The line keeps rising, sometimes slowly, sometimes faster, but always upward overall. And you begin to understand something powerful. Staying invested is harder than starting. And just when everything feels like it's finally working, the world shifts, the market trembles, uncertainty spreads. It's 2008, fear is everywhere, headlines scream collapse, investors panic. The stock that was rising confidently suddenly drops, fast, aggressive, unforgiving. Your portfolio shrinks, numbers turn red, confidence starts cracking. For the first time, you truly question the decision you made years ago. People around you say it's over, that tech is finished, that this was a mistake. The chart looks brutal, sharp declines, no reassurance, no comfort. Every day feels heavier, because losses feel louder than gains ever did. You consider selling, just to stop the emotional pressure, just to breathe. But selling now would lock in fear, and you know that deep down. So you wait, not confidently, not proudly, but stubbornly. The company keeps building quietly, even while the market shakes violently. Innovation doesn't stop just because investors are scared. Months pass, slowly, painfully, uncertainty lingering in the air. Then something subtle happens. The padina slows, the line stabilizes. The panic fades slightly, not gone, but weaker than before. Recovery begins quietly, almost unnoticed by those who already left. Your investment starts climbing again, slowly, cautiously, rebuilding strength. And you realize something critical: the biggest returns are born inside the biggest fear. Because surviving the crash mattered more than timing the peak ever did.
The trillion-dollar milestone passes, and momentum somehow doesn't slow down. Confidence builds, investors pile in, institutions increase their positions. Your portfolio keeps rising, quietly, almost unrealistically. Another stock split happens, and the numbers look smaller, but the value keeps growing. Apple expands deeper into services, subscriptions, recurring revenue streams. The business becomes stronger, more predictable, more durable. Short-term dips still happen, but they no longer shake you. Because experience taught you, volatility is temporary, direction is long-term. The world changes, technology evolves, competition rises. Yet Apple adapts, adjusts, refines, and keeps moving forward. Your initial $100 now looks like a tiny seed that became a tree, and that tree keeps growing, season after season. Another milestone appears, $2 trillion in valuation. The headlines return, louder than ever, celebrating history. But you understand something deeper. Milestones are effects, not causes. The real cause was patience, repeated over years. Every year you didn't sell added invisible strength. Every crash you survived multiplied future gains. Time kept compounding, even when you weren't watching. And now the numbers reflect what consistency quietly built. And still, even after $2 trillion, the growth story doesn't feel finished. New products launch, new services expand, and the ecosystem keeps tightening around users. Your investment continues compounding, almost effortlessly now, driven by scale. What once felt risky now feels structurally powerful, deeply embedded in the global economy. Market corrections still come, sharp, uncomfortable, sometimes unexpected. But you react differently now, calmer, more experienced, less emotional. Because you've seen fear before, and you've seen recovery follow it. Another year passes, revenue climbs higher, margins remain strong. Apple crosses $3 trillion in valuation, something almost unimaginable years ago. The number sounds surreal, but the journey that built it was gradual. Your original $100 has multiplied many, many times over. What felt small and insignificant became meaningful through time alone. No trading strategy, no perfect timing, just staying invested. The real advantage wasn't intelligence, it was endurance. While others chased trends, you held position. While others panicked, you stayed still. And that stillness quietly outperformed constant action. Now, when you look at the chart, you don't just see numbers. You see years of patience, doubt, discipline, and belief. And you realize the biggest returns came from doing almost nothing at all. Because in the end, the market doesn't reward noise, hype, or constant reactions. It rewards patience held through uncertainty. It doesn't reward frantic movement or emotional decisions. It rewards conviction maintained consistently over long periods of time. Your $100 didn't grow in a straight, comfortable line. It expanded through chaos, volatility, and unpredictable cycles. Through crashes, through fear, through headlines predicting collapse, through moments when quitting felt completely logical. Every dip became a psychological test, and every recovery became proof that endurance matters more than timing. Most people only see the final number today. They never see the waiting, the doubt, the quiet years in between. They see trillions in valuation, but they don't see the uncertainty, the hesitation, the risk behind those milestones. Compounding feels invisible at the beginning, almost disappointing, but later it becomes undeniable and overwhelming. The early years felt slow, repetitive, sometimes even pointless, with barely noticeable progress. But those slow, uneventful years quietly built the base for exponential acceleration later. The real power wasn't just the company's innovation, it was time combined with sustained belief. Time transformed small annual percentages into powerful, life-changing multiplication over decades. And belief, even imperfect belief, kept you invested long enough to experience that transformation fully. If you had sold early out of impatience, the story would have ended quietly, without significance. If you had panicked in 2008 during the crash, the final outcome would look completely different today. If you had chased something newer, louder, more exciting, you might have abandoned this before it matured. But you stayed invested. Not perfectly, not confidently every day, but consistently over time. And in the long run, consistency quietly outperformed brilliance, prediction, and short-term strategy. Now the result speaks clearly for itself in numbers that once sounded unrealistic and exaggerated. All of it started with a simple decision years ago and the discipline to remain still afterward. And when you look back at the entire journey now, it doesn't feel like luck. It feels like a lesson in discipline. The biggest gains didn't come from predicting the future perfectly. They came from staying present through uncertainty. What seemed like a small, almost forgettable investment slowly transformed into something meaningful. Not overnight, not in one explosive year, but through steady accumulation over time. The chart may look dramatic in hindsight, but living through it required patience and emotional control. There were moments of excitement, moments of doubt, moments where selling felt justified. But long-term wealth rarely belongs to the fastest mover. It belongs to the one who lasts. Compounding rewards time in the market, not perfect timing of the market. And time only works for those willing to let it pass without interrupting the process. Your $100 became thousands, then more, simply because you allowed growth to unfold. The transformation wasn't magic, it was mathematics combined with discipline. Small percentages, repeated consistently, created extraordinary outcomes over decades. Most people search for the next big opportunity, while ignoring the power of holding the right one. The difference between average and exceptional often comes down to patience. Not dramatic action, not constant trading, but calm consistency. And that consistency, maintained quietly, built something far greater than expected. So the real question isn't whether Apple was a good investment back then. The real question is whether you can hold through boredom, fear, and uncertainty next time. Because the next opportunity will likely look ordinary in the beginning. And if this story changed how you see investing, subscribe, because the next one might change your future.